Okay, elections are coming up. I think we have, after today, I think we have 6 trading days. Well, elections are on the 5th, so however many days we have. So as we know, there are betting sites, right? I'm not interested in any of that. I don't know how those things work, but I just put the odds, and the odds as of, I think, last Friday, because this is last Friday's screenshot, because I couldn't do Power Hour. Like if you go to Vegas, right, you're betting $165 on Donald Trump to make 100, and if you bet on Kamala Harris, you bet 100, you will make 140. This is on the to win the elections. Okay. So these odds actually have grown now. It's almost supposedly on certain websites, Trump's lead is 20 points. Look, whatever it is, it is. I'm just going to be glad that this thing is over with. Okay, that I'm not going to talk about elections. I don't want to talk about elections. Country needs this to end, and then hopefully, cooler heads will prevail, and somebody will start working on that national debt, please. Because I watch all the debates, there were literally only 4 single questions about the national debt. The national debt is crippling this country. It's like an anchor dragging on a boat. Lift the anchor. We don't need that. Let the economy go. But you can't print yourself into prosperity, Washington. Don't you guys get that? You just can't. Doesn't work. It will never work. Anyway, so how am I going to trade the elections? Well, I want to trade the elections, right? If there's money-making possibility, I will trade it. So as we all know, DJT is the symbol, Donald J. Trump. There's a stock, common stock, that trades on the markets. So when I am doing my watch list, I will talk about my strategy, but I'll talk about it a little bit now to just make the segment whole, okay? So Trump Media stock, DJT, is now up 19% today as Donald Trump takes the lead in prediction markets. Okay, fine. So for your information, DJT was about $11 number, not even a month ago. As of before I came on, I think we were at 37, 38. So it's almost a 4-banger. The all-time high on DJT is 75. It's never been higher than 75. So actually hit 75, then crashed to 10, 11. I mean, it's extremely volatile. Okay. Should you buy DJT anticipating Trump's win? No. Just like, I mean, it's your money. You can do whatever you want. But my advice, again, no advice, but I'm not buying it. But I have a strategy to trade it. So as you guys can see on that little chart, it says 30. Now it's at 37. It's up another 20% this week. So this weekend, Kalshi's prediction market shifted to showing Donald Trump 8 points. This was as of last Friday. This is last Friday's Power Hour screenshot. He supposedly has a 20-point lead now. Trump has taken the lead in several key swing states. Okay, great. So what is the strategy? All right. So DJT, obviously you can short the stock. I will not do that. You can buy the stock. I will not do that either. But now comes the derivative part of the game. Okay, what's the derivative of DJT? DJT has options. Okay, so as if you are reading your books, members and non-members, about options, what do we have in options? We have keywords in options, which I've explained to you guys on the education part. The first month and a half is all videos about education. Please go revisit those if you want to refresh your memory. It's on the channel. So we have call options. We have put options. We have in the money options, at the money options, out of the money options. Okay. What else we have? We have strike price. We have expiration date. These are all the keywords that you guys should know by now. Then we have the wonderful Greeks. Please. Delta, gamma, theta, vega. Please learn the Greeks. It will save you so much money. The most important one is IV, not the type you stick in your arm when you're dehydrated. It's called implied volatility. So the way I'm looking at this is, in fact, I may even do a leg of it today while we're live. I don't have it yet. What I'm looking at is that implied volatility for the November 15th options expiration, which is a regular expiration, third Friday of November, which will be after the elections, okay, is 3 times what it should be. Meaning, market makers are not stupid. They price these options at a level that, to me, says nothing but sell premium, okay? How do you do that? How do you sell something you don't have? Well, you can do that with options. If your account is set up to sell premium, now you have to have a margin account to be able to do that. You can do that on Robinhood. A lot of you have Robinhood accounts, but then you have to have enough money in there because there is carrying costs for that option. My bet is that, okay, let's say Donald Trump wins. All right. Well, stock has already gone from 10 to 38. By the time, the election's coming, maybe 45. Okay, so everybody is piling in, anticipating a win. Okay, well, all right. Well, the market maker already figured that out. So what do? They increase the implied volatility from 100% to 300% now. Okay. So I'm looking at 2 strategies. Okay. I'm looking at a short strangle. Okay. So I will explain what that is. And I'm also looking at, I'm also looking into doing simultaneous credit call spreads or call credit spreads, whatever you want to call it, and put credit spreads. What are those things? All right. So short strangle is selling the puts, selling the calls, collect all the premium. And when the election is over, right, what is the stock going to do? Okay. Stock may go shoot the moon. I don't know. But what you're counting on. So my strategy is going to be selling the $75 calls, which is another double from here. And stock has never been that high. So that's my real measuring stick up there. Sell the 75 calls, simultaneously sell the $15 puts. Okay. So by selling both sides, you're collecting premium. Okay. The premium, I'll look at it, and collection of the premium is probably close to $5. My anticipation is that when the elections are over, that 300 IV, literally, in fact, before these options, way before these options are going to expire, are going to get crushed. So that's the theta part of the Greeks, meaning time decay. That's going to get crushed. Once they get crushed, those options are going to absolutely hit the wall. Literally on the night of the next morning, that 300 IV is going to be more like 80 IV. And then even if the stock moves 10 more points after he wins, in case he wins, those options are still going to lose value because the market makers are going to absolutely melt those things down. The other way is to do it with less potential of profit, but less risk. Much less risk is the put credit spreads and call credit spreads. And those are, I will still sell the $75 calls, but then with 2 or 3 standard deviation, I will go buy the $80 calls or $82.50 calls in case something like this happens. He wins, stock opens $80 the next morning, right? Okay, my short calls are going to get hammered, but then I have protection above it on a 2 or 3 standard deviation to protect myself. But then I'm going to do simultaneously the same thing. This could also be looked at as a butterfly or an iron condor. Please go read your books. I know now I'm going way over your guys' head, but don't worry. I will show that on my option chain when I go to the watch list. So that's the strategy. One is a lot riskier, shorting a strangle or a straddle. And the other one is much less risky, but then the return is going to be less. So I will decide on that on the coming week or so. But if they're worth it today, I will actually put on a position and explain to you guys while I'm doing it.